Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. We've got key earnings reports on deck, and we're bringing you all of that live breaking data. Just now, Apple's third quarter earnings, they are crossing the wire just moments ago. Let's get you those numbers with the stock popping, at least initially here. Q3 EPS looks like 157 versus estimates of 143. I see revenue 94.04 billion versus an estimate of 89.3 billion. It looks like iPhone revenue 44.58 billion. That is also a beat. The street was at 40.06 billion. Josh Schaefer, looking at you, what do you see in these results as well?
Yeah, Josh, I mean that iPhone beat really popping off the screen to me, right? To see iPhone revenue coming in at almost 44.6 billion, and that was above the street estimate of 40.06 billion. Also some other beats across the revenue spectrum here. I'm looking at Greater China revenue coming in at 15.4 billion. That's above a 15.2 billion estimate. Then you go down to products revenue overall, that coming in at 66.6 billion, above a street estimate of 62 billion. Again, that smaller Mac revenue segment coming in at 8 billion, above an estimate of 7.3 billion. So it seems like some of the key products for Apple here driving better revenue than the street had expected. Stock was initially up 3%, Josh, right as this release crossed, coming down a little bit now, up about 1%. But that seemed to be the instant read through. Of course, we don't have guidance from Apple in this release. That's kind of one of the key questions that I know I was seeing from analysts moving forward is they're getting a lot of client inbound about where margins are going to be in the coming quarters and sort of the tariff story that relates to those margins, right? What happens to margins in the out quarters is a key question that there's no real insight to, at least in the release.
Yeah, on the call for sure. I think You're nailing it. And that'll be a big, how do they address the guidance, how they talk about the forecast? That'll be a big focus. Tariff impact as well, Josh, is going to be in focus because you're looking for more clarity there. They did say last quarter, remember, to expect a $900 million impact, but what does the impact look like in the quarters ahead is another key question that's going to come out on the call.
It absolutely is, and I think it's going to be interesting to hear how they're able to walk you through that part of the process because, of course, the tariffs themselves are such a moving target, right? So where that range ends up being and how they're able to explain that seems like a key piece here. Of course, again, we're talking really about margins, specifically when we're talking about that part of the line item. That's going to be where you're looking to see how much are tariffs impacting margins moving forward, and we'll have to see, I guess, really on the call once we get more
stock
clarity.
up about 2.25% now. Thank you, Josh. For more on Apple earnings, we have Angelo Zeno, CFRA Research Senior Equity Analyst. Angelo, it is great to see you as always. Those Apple's results just crossed. Your reaction to the report, Angelo?
Yeah, Josh, thanks for having me. I'd say overall the numbers were pretty good, right? But the question isn't necessarily about the quarter. It's kind of about the guidance here for the September quarter, and maybe to the point that you guys had just talked about. What is the outlook thereafter? And what I would say is, there was likely some sort of pull-in effect here that went on in the June quarter, given that we saw such strength almost across the board as far as the product revenue is concerned, and likely that had some impact due to the uncertain tariff landscape at this point in time. So again, it really is going to be dictated on what happens, what Tim Cook has to say on this call as far as what that forward guidance is going to look like.
Angelo, you mentioned tariffs. That is a key question here. I mean, as you try to model this and forecast, what do you think that financial impact could look like for Apple in the quarters ahead?
Well, so here's the issue. Nobody really knows, and I don't think Apple knows themselves. And the problem right now is, and a big reason why they're probably going to provide limited guidance here for the September quarter. I wouldn't even be surprised if they avoided guidance on potentially the revenue or the gross margin side of things. Listen, there's a lot going on here over the next 5 to 6 weeks for Apple, right? I mean, you kind of look into just the month of August alone, you've got likely some sort of clarity from the 232 pending semiconductor investigation, where that's really where the tariff situation hinges for Apple. And whatever number comes out of there, is it 25%, is it 50%, what have you, is going to partly dictate what Apple is going to be penalized here, at least on the tariff side of things. And then the other issue is, as we progress into September, what does Apple do from a pricing perspective? If we were to see higher tariffs from this 232 semiconductor investigation, our belief is they're going to look to offset that. So you're probably going to see some sort of pricing hike if you see these higher tariffs. So, our view is they're going to try to sustain some of those margins. But again, it's tough to really know. Right now, we're pegging in about a 25% expected semiconductor tariff, and likely, some sort of, $50 bump up or what have you in terms of pricing with the iPhone 17 cycle. But listen, it's very fluid in nature. We just don't know the details at this point in time. And Apple themselves, the bigger problem, doesn't know as well.
So when you think there could be price hikes, Angelo, for those new devices in the fall, have you tried to put a number on that? What kind of hike we could be looking at? Quantify it?
Yeah, I mean, like I said, we're thinking potentially, and this is important, right? When you look at Apple specifically, they haven't increased the base price of their iPhones, right, since the iPhone 12 cycle. The reason they did increase the price on the iPhone 12 cycle was because of the move to 5G. 5G has significantly higher content costs attached to it, and as a result, they were able to pass through those higher prices to the consumer. It was expected. Over the last couple of years, they've done a number of things to avoid any type of price hike. We think it's probably going to be something along the lines of, let's call it about $50 or so across the board. It could potentially be more than that again if the tariffs are higher than we anticipate. So, again, it's very uncertain in nature. But the fact that Apple historically has tried to prevent these price increases to the consumer is very important. I think also Apple wants to make sure the optics doesn't look bad with all of this, right? I mean, you've got a Trump administration at this point in time that probably is looking very closely at some of the moves that Apple as well as others are doing, whether or not they're passing on these higher costs to the consumer. So Apple wants to avoid any sort of bad optics at this point in time as well.
A key reason, Angela, stocks in the red this year heading into the print has been some disappointment over the company's AI position and role and strategy. How, as an analyst, are you thinking through that dynamic?
So that's a good question. And to be honest with you, I mean, I think that's probably the biggest reason for the share underperformance at this point in time year to date. I mean, when you think about what else is going on across the markets, across the tech space, it's very difficult to justify owning an overweight position in Apple when you've got these great stories going on across the rest of the tech space. But I think what you do have going for yourself here is we're going to get some good clarity here over the next couple of weeks across a number of uncertainties, whether it be tariffs, whether it be the pending search monopoly case that Google is going through. We expect some sort of outcome in August as well. When you look past that, I think the street starts looking at what Apple can do as far as AI is concerned. They have to get this right, I'd say, at the very latest by the next developers conference next June. So we expect them to figure this out at some point here over the next 9 months or so. They've got all the money in the world to throw at this. My guess is they probably get this thing done via some sort of partnerships because they've lost some great talent here over the last couple of weeks and months. So again, it's something that the street is really kind of hanging on at this point in time. But we're believers here of the management team. We think they get this thing somewhat resolved here over the next 6 to 9 months. Final
question, Angelo, in terms of what could be coming. We do have reports, Angelo, maybe a slimmer iPhone model could be on the way this fall. How excited should investors be about that?
Yeah, I mean, I'm not overly excited about it, to be honest with you. We're actually going into the iPhone cycle essentially assuming very low to no unit growth on a year-over-year basis. So, maybe there's some excitement towards that device, but overall, it's not something where we think consumers are going to rush to upgrade. But yeah, I mean, at this point in time, in terms of on the unit growth side of things, we're not looking for any type of growth for the iPhone 17 cycle versus 16. Where we are more excited about is the potential iPhone 18 cycle, where they can start unleashing something along the lines of a foldable device.
All right, with the stock up 2% right now in the after hours. Angelo, thanks as always, sir, for that instant analysis. We appreciate it.
All right, thanks for having me.
F5 reporting solid third quarter results on Wednesday, beating analyst estimates on the top and bottom lines. Here to walk us through the report is F5 CEO Francois Locoh-Donou. Francois, good to see you as always. You reported, Francois, Q3 results beat. You raised your full year forecast for revenue growth. Investors like what they saw. Your stock jumped about 5% today, Francois, in today's trade. Walk us through that report. What are you seeing in the business?
Well, we had a very strong quarter, Josh, and the one big takeaway of the quarter is we had 26% product revenue growth in the quarter, which is the strongest we've had in over 14 years. And if you look at what's driving those trends, it's really two things. One is large enterprises moving to hybrid and multi-cloud architectures. And really, F5 has been working to position the company for this hybrid and multi-cloud world for several years now. And we're seeing the benefits of these investments in customers that want to be supported in software as a service, in hardware, and in software. And F5 being the only company that can do all of that. And then the second trend that we're seeing with large enterprises is adoption of AI, of course, and getting their infrastructure ready for AI. And those trends are also starting to become tailwinds for F5 because we have the ability to move massive amounts of data at speed and do so when enterprises are trying to connect data stores to AI models. And so those two are becoming tailwinds in our business and reflected in the results that we saw yesterday.
You're kind of leading me where I want to go, Francois, because in terms of momentum for your business, I wanted to ask you more about what is sort of driving that, whether that's simply a tech refresh of your install base, Francois, or no, it's AI, it's something new developing here.
Well, tech refresh of our install base is a catalyst and has been strong because we had customers who, a couple of years ago had been sweating their assets, and we are seeing a snapback of that and a bit of a catch up on customers that had not done that. But actually, the strength we're seeing in the business actually goes well beyond that. We're seeing these trends in reinvestment in data centers, data center modernization. Customers that thought they would go all the way in the cloud, they've gone to the public cloud, they've repatriated applications, and they are now embracing these postures where they're going to have applications in data centers and applications in public cloud. And they need partners that can support them across these multiple infrastructure environments. And that's precisely where F5 shines, is the ability to support across all these environments. So that's also providing a tailwind in our business. And then AI is a nascent trend, a newer trend that's not yet really material to the numbers we're seeing now, but we're starting to see really exciting wins, in delivering data from data stores to AI models or securing AI applications. And we think that market is going to grow substantially over the next few years.
How is the competitive landscape evolving, Francois? I think of rivals for you, Akamai, Cloudflare. I mean, how is it evolving? What are your competitive advantages?
If you look at each delivery model, whether it's hardware or software as a service, for each of these delivery models, we will have a different set of competitors. Where we have really virtually no competition is in our ability to support customers in all three delivery models. And we're already seeing that in a number of wins we had this quarter where a customer may have had a single vendor for SaaS security or another vendor for hardware support in their data center, and they wanted to consolidate on a single vendor, and they are able to consolidate on F5 because of the platform strategy that we've put together, a platform we call our application delivery and security platform, which brings all three of these delivery models together for customers and greatly simplifies the complexity that they deal with of delivering and securing all of these applications and APIs every single day.
Final question, Francois. Just curious, are you seeing any kind of macro or tariff-related impact on the business?
We have not. As it relates to F5 specifically, we have architected our supply chain to be very resilient. And so we're not getting an impact in terms of supply for F5 with tariffs. And in terms of our customers, Josh, if I go back 90 days ago, there was quite a bit of uncertainty as to where things were going to go. And we were a little worried that customers in the face of uncertainty would start to temper a little bit their spending. We have not seen any change in buying patterns or behaviors from our customers as it relates to tariffs or the macro environment. So things are pretty stable right now.
Francois, always good to see you. Always good to have you on the show. Thank you, sir.
Thank you.
Stocks closing lower as President Trump's tariff deadline and the July jobs report looms. Yahoo Finance's Josh Schaefer joining us now with the trading day takeaways. Josh.
Hey, Josh. Yeah, I looked earlier this morning. We had NASDAQ futures up over 1.3%. You had strong earnings out of Meta, Microsoft, and it was, oh boy, here comes that AI tech rally. Both the NASDAQ and S&P 500 were trading at records at one point today. That didn't quite actually play out with sort of how the day ended. You mentioned there were some trade updates throughout the day, and that seemed to maybe grab some of the headlines. But I still want to focus on the two big beats, because you look at it here, Meta up over 11% today. Of course, Meta coming out with stronger than expected results, also stronger than expected guidance and boosting their CapEx. Same with Microsoft. Microsoft was up almost 8%, kind of got caught up in that broader sell-off. But I wanted to highlight one chart that I think sort of helps explain what investors are looking at when it comes to these companies. I mean, these companies keep hitting record highs. Why are you still buying them? What's going on here? This was a great chart from Jefferies analyst Brent Thill. He highlights Azure beating estimates, how much they beat estimates by for that cloud segment for Microsoft that increased 39% year over year. Up over 4.5% for my surprise factor. Look at this chart, Josh. That is abnormal, right? The street had come to expect that Microsoft's cloud segment was great, was going to continue growing. It was hard for Microsoft to surprise. Well, you add in this AI element, the segment gets even better than expected. You get this big beat. That's the kind of chart that an investor's going to like to see, right? That growth story is sort of reigniting when it comes to Microsoft right now.
So viewers watching this, they look at these big tech reports and results and reactions for some of them, and they're thinking, I don't know, did I miss my spot?
I think right now what we're hearing from some strategists, we spoke with Omar Aguilar from Charles Schwab earlier today, Julie Hyman and I did. He said no. He said, I'm still looking to get into big tech and finding opportunities within big tech. What Aguilar highlighted, which was rather interesting, is sort of the different parts of this AI trade, right? So even if we just look at our Mag 7 here, we can sort of highlight it. Amazon, Microsoft, Meta, those are sort of, and we could throw Alphabet in there too, right? Those are the cloud plays. And he's saying he's more interested in cloud service type plays. If you look, if I can get over to our AI board here, I'll highlight to you how some of those stocks have been doing really over the last couple months. There's been a big rally in some of those names off the market lows. Look at a Supermicro computer that's involved sort of in that space. You also look at a Datadog that's in that space, right? Salesforce, which I don't think is on here, had a rally at one point. And so you're seeing that AI trade broaden out and continuing to hear people talk about services. How do I use AI as a service? Being interested in that space. Of course, chips, but also how do we use the AI, right? Because Meta and Microsoft are certainly telling that story well.
All right, Schaefer, bullet point number 2.
Josh, jobs report's coming. It's been a long week, but we have an NFP report tomorrow, the July jobs report. So expectations are for 105,000 payrolls, unemployment rate at 4.2, average hourly earnings essentially flat at 3.8. This would be a move higher from 4.1. And then that non-farm payroll number would be a little bit lower. Economists and previews, team over at Bank of America essentially saying this is fine. It's not a red hot labor market by any means, but it's not falling off a cliff. And
Cooling, not crashing.
Cooling, not crashing, and we're still sort of in that space if we get numbers like this.
What did Jay Powell have to say about that?
Hey, Jay Powell called the labor market solid yesterday, Josh, and he said that this, by the way, we should note, this is the number one thing he's watching right now. A very smart reporter over there asked him specifically, when I look at that report, Jay, what should I look at? He said the unemployment rate, and the unemployment rate at 4.2 or 4.1 is in a good spot. And if that were to keep moving higher, that's when maybe the Fed would cut to sort of help out the labor market.
All right, we'll see what comes tomorrow. Thank you, Josh. Appreciate it. Let's take a look now at what's trending after hours. Shares of Coinbase fallen after hours. Company reporting second quarter earnings and missing analyst estimates on some key metrics. Total revenue coming in lower. Coinbase reporting a total revenue of $1.5 billion. That was versus an analyst estimate of $1.59 billion. Trading volume also coming in weak for Q2. That came in at $237 billion against estimates of $252.8 billion. Subscription and services revenue, that also came in weak at $665 million versus analyst estimates of $745 million. Reddit shares, meanwhile, they are surging after reporting second quarter results. Company topping expectations for revenue and daily active users, also beating estimates, rising 21% year over year. Looking ahead, Reddit providing a better than expected revenue and adjusted EBITDA outlook for the third quarter. And Strategy reporting a beat on revenue for the second quarter. Overall capital raising activities have resulted in its Bitcoin per share increasing to 25% year to date. The Bitcoin treasury company also lifting its full year BTC yield yield target to 30% from 25%. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.